You're listening to That Home Loan Hub. I'm Zibuni Salimova, here to make home loans and property investing simple, smart and stress-free. Let's get you closer to your property dreams.
Kia ora, welcome back to That Home Loan Hub. Today I'm taking over the mic because our beautiful Zibunisa over here is slowly losing her voice. But today our topic is OCR.
OCR.
So what does OCR stand for?
Official cash rate.
Yeah.
Hello, people.
So there's another official cash rate announcement coming on the 8th of October this year. It's the second to last one for the year. And then we're going to put in our predictions.
Predictions time.
Yeah, I love it. Love the predictions time, you know. What's the gamble, team?
All right. So according to a lot of specialists, at first they were thinking about 0.25, weren't they?
Yes.
But since the latest reports that have come out, the economy is not doing well.
No, so GDP,
Gross.
oh, do you want?
Let's explain what GDP is. Go.
GDP stands for Growth Domestic Products. So our domestic growth, New Zealand's economy, domestic growth, hasn't actually done as well as predicted. It's actually dropped 0.9%. So what that means is that the OCR will need to drop to stimulate the economy. So
people need to start spending.
Correct, but people don't have money to spend.
And the easiest way for them to find that money is when the government makes things cheaper for them, which is their biggest expense is usually mortgages.
Correct.
This is where a lot of your money goes, right? I mean, probably some of you, 70% of your income goes towards paying your mortgage.
Yeah.
Mm-hmm. Yep.
So back to prediction.
Back to predictions, baby.
Yeah. Oh, it was written in at 0.25. Now there's talks about 0.50 or even 0.75 I've heard in the grapevine as well.
Yeah, that's huge.
Now I'm like, okay, well, there's three choices. Which one do I pick? It's my prediction.
We haven't seen this big of a drop since COVID, I would say. Right? Yeah. That's when in 2020, I believe the economy wasn't doing really well. And that's when the government was going, all right, let's pull these levers. Yeah. Let's keep slashing the OCR. Let's bring the interest rates down. So in terms of that, I mean, 0.5 or 0.75, which one's going to be?
I'm going with 0.5. I don't think they'll go that ruthless to 0.75. I think 0.5 is my prediction.
Okay. Yeah. I think I'll back you up on that. Yeah. I think 0.25 is not going to make much of a difference, as they've seen. This is our second to last review this year, and then we all shut down for a big holiday break and Christmas, etc., etc. And we're going to come back. I think the next OCR review is in February, isn't it? So between November to February, they need to do something.
Yeah.
So I would say 0.5 this time and 0.25 in November.
Time. Yeah, same.
All right.
Yeah, I'm about the same as well. So what does that mean for, mortgage holders?
Well, a lot of them are coming up off their refix rates at the moment, right? And we're going to actually record another episode where the breaking right now and fixing is worth it, because some of you may experience some really high break fees, but is it still worth it in the grand scheme of things?
Yeah.
So we'll come back to that episode. But what it means for our mortgage borrowers is the interest rates will continue to go down.
Yep.
And hopefully that will release more money back into their pocket.
But I think something to be mindful of is that, yes, OCR has a impact on interest rates, home loan interest rates, but also the swap rates have an impact on those interest rates as well. You may be thinking, what is a swap rate?
What is a swap rate?
So swap rate is basically what the banks buy their money for at, X amount of interest rate, and then they add their margin on, and then they sell it back to you as your mortgage rates that they advertise. So there's two players in that sense for mortgage rates. Official cash rates, or OCR, will have an immediate effect on the floating rates though. So if you see the 0.5 cut, that would usually flow on to effect on the variable rate. But in terms of the fixed rates, it's the swap rates and the OCR that is affected in that. But I still think we're going to see, hopefully, 4.5s.
4.5s. I hope so. I think at the moment we're sitting the lowest rate for 1 year, 18 months, and 2 years is 4.72, right? And then for 6 months, we're sitting at 4.95.
Yeah.
And then the longer terms are usually a bit higher, but most of them are sitting below 5%.
Yeah.
So I think 4.5 for 2 years would be a good deal.
Yeah.
And to be honest, I mean, some of the floating rates at the moment are lower than what
some of the fixed rates people are still on.
Yeah, exactly.
Yeah.
So that brings us to our next episode. So stay tuned. We're going to cover off whether you should refix and break now or whether you should just wait it out and whether it's worth it. So
cool.
Stay tuned. Thank you so much for this episode.
Bye.
And that's a wrap on that Home Loan Hub. Don't forget to hit subscribe and join me next time for more property tips and tricks. Your next smart move starts here.